Should you delay filing for Social Security or claim early? Discover the surprising answer that trips most retirees up and can get you up to 175% more in benefits.
Welcome to Label on Fire with Label Sternbach, the financial independence and retirement show dedicated to helping you build the life of your dreams as fast as possible with as little stress as possible. Ladies and gentlemen, it's time for Label on Fire.
Hi, everyone, and welcome to this episode of Label on Fire. I'm Freddie Bell, and I'm with Label Sternbach. He's Amazon's best-selling author of 2 different books, Living with Financial Anxiety and Authenticity. Libel's here today to talk about Social Security. Libel, hello and welcome back.
Hey, how are you doing this week?
I'm really well, and thank you so much for asking. And I'm just curious, so let's start with the big question. Can you really get 175% more in SS benefits?
So, you absolutely can. In fact, if you don't believe me, go to the Social Security website, pull up your statement, and look on the bottom left of it, right? It has a whole list of all the people who can get benefits under your work history. And on there, it says the maximum family benefit, which is 175% of your Social Security. Right, so there are all these people, which includes your spouse, your surviving spouse, children, parents. There's a long list of people who can get paid on your work history, and factoring in what they get and if they can get it and when to get it really can make a difference in your Social Security. So when you're thinking about filing, it's not just about you, it's about everyone else, right? And isn't that really most things in life?
It really is. Do you see that a lot of people miss that particular piece of information?
100%. Again, this goes back to this conversation that we've had over a whole bunch of episodes, the headline thing, right? It's so easy to go out with these bold statements of delay and get the biggest check, or take early and get it as the longest lifetime benefits, or people do the break even thing or whatever, right? All those things are nice headlines, but they have nothing to do with your reality. This is what I tell every single person. Unless you're single, unmarried, and don't have kids, delaying Social Security benefits is probably not your best option. And even if you're single, unmarried, and don't have any kids, delaying may not be your best benefit. In fact, I just told a couple this morning who they were thinking that one of them should take early and one of them should delay. I actually told them both to take early, even though it would reduce their benefits by a significant amount of money. I told them to take early because it would take the pressure off of their portfolio, their investment income, and would make their retirement last so much longer. In fact, it added something like $1 million to their retirement savings over the next 20 years just by taking Social Security early. So the answer is really different for everyone. And you got to map it out to find out what is the ideal filing age for both you and your spouse.
Do you find that there is a ratio? Do you find that more people take these SS benefits early? Is it like 60%, or where does it usually shake out?
I don't know. In terms of how many people do I recommend taking early versus delaying, I think everyone's different.
And that's where I was going.
I think it really depends. I know there isn't a percent. I can't put a percentage and say this percentage I say early, this percentage later, because it really becomes very much a cash flow question and not a question of how do you get the most out of Social Security.
Interesting. Everybody, if you haven't been able to tell, we're talking about getting the most out of your SS benefits. And Libel, I read somewhere about filing for my spousal benefits and suspending my benefits so I can get delayed retirement benefits. Is that an effective strategy, and is that really a thing?
So it used to be an amazing thing that people could do. It used to be, right, you had your Social Security benefits, right? You paid into this insurance program that the government provides, and you also could get benefits under someone else's, right? And so you were able to tell Social Security, hey, listen, I'm going to claim my spousal benefits, but I want my personal benefits to continue to delay. I'm not going to claim my own. right? And so what that allowed you to do was to accrue those deferral benefits, get the full maximum amount that you could from your benefits while still getting something from Social Security on your spouse's benefit. Now, this is something that I've been yelling from the rooftops for the last few years. This is what I call a stealth tax. This is one of the ways that Congress has been taxing us without saying that they're taxing us, right? This is a way that they're reducing benefits without coming out and getting everyone angry that they're reducing Social Security. So what they did was they implemented a new rule called the deemed filing rule. Now, this rule, what they sold it as was, we are going to close the loophole of all these people who are taking advantage of the Social Security system and doing things like this file and suspend. When in reality, what they did was they said these benefits that you are entitled to, that you have been entitled to up for since the program began, we're going to terminate that. And we're going to say that the only way that you can get your spousal benefit, or these other people, this 175% of benefits that are owed to family members, the only way they can get those benefits is if you file for your Social Security. And so now what happens is it really becomes important for you to decide when you file for Social Security. So the breadwinner needs to figure out when do they file. And then the secondary spouse, the one who was staying at home with the kids, who didn't have that big great income, they really need to figure out whether to file early or file late. And one of the reasons why they may want to delay their benefits, even though they do not get, even though they're not really going to get a huge amount from Social Security, is mainly so that they don't reduce their survivor benefits, right? And so this becomes a huge calculus that you got to think about, is not just my benefits when I'm living, but my benefits when I die, and the benefits of my children or my dependent parents who can also claim on my Social Security or who may also receive benefits. And oftentimes, claiming a little bit early will end up actually getting you more lifetime money than if you delay and get the bigger check.
We're talking with Leibel Sternbach, and we're talking about whether to take your Social Security benefits early or to delay them. And I'm just curious, is there a formula that you use when you're talking with people who bring you these types of questions, Leibel, that tells them when the right time might be to start receiving these benefits?
Yes. So there's a process. There's a process that I go through, right? To say a formula would lead you to believe that you can plug in some numbers on a computer screen and it would give you an answer. And there are tools out there that pretend to do that. But here's the problem with just plugging numbers on a screen, is that it takes those numbers out of context, right? And something that if you're on any of my classes, you hear me talk about all the time. We can talk in depth about Social Security. We can talk in depth about taxes. We can talk to our heart's content about the theoretically best decision to make. But the truth is, how does it all work together? How does it create the experience we want? How does it create the retirement that we want, right? The lifestyle we want? That is the real question. So the question becomes, right, and this is the process that I do for everyone. I do it for free for anyone who takes the time to actually book some time on my calendar and go through this process, 100% free. It is, number one, we take a look at what is your income needs in retirement, right? What do you need to live on? Number two, we take a look, Social Security claiming early, claiming late. What is the ideal? What will get you the theoretical most amount of money? And then we run some analyses, right? And we see, okay, based on the amount of money that we need in retirement, based on what our assets are that we're going to have to convert into retirement income, based on Social Security, how do we bring those three things together so that we create the best experience for ourselves? What gives us the most amount of money in the immediate future? What gives us the most amount of money in the long-term future? What is best for our surviving spouse, right? And for our children or the people who we want to leave money to when we pass, right? Those are the questions that we need to ask. And there is no way around doing the hard work to figure it out. We just got to go through, we got to go over everything and see what makes the most sense. And I can tell you right now that every time that I thought I knew the answer before talking to someone, I would talk to them and be like, oh, I'm sure that we should delay benefits. I'm sure we should take it early. When I do the analysis, I'm always surprised by the answer, right? You really don't know what the best solution is until you do it. And wow, right? If I take it 2 years earlier than I thought, or I delayed it by a year, it's going to make it's going to have such a huge impact on my retirement, right? There's one couple that you can actually, if you go on my website and some of the classes, you can see me talking to them. I came out and I told them, and I said, you should delay Social Security, or you should figure out where to make up $15,000 a year more in income, because that had such a huge impact on their ability to stay retired, right? $15,000 was the difference to make it or break it for them.
Wow.
And that's something, right? You can get it from Social Security by delaying for a few years, right? You can get it by making your investments stretch a little bit longer. And maybe that's the solution, right? Maybe it's that they don't take money, they take our Social Security early so that their retirement savings can grow longer, right? And the calculus is different for everyone, but we got to do the hard math.
We just come through a midterm election, and then in another couple of years, there is a general election. And at every point, there seems to be discussion about Social Security and whether or not there's enough money to fund it. Do you think that this is all hyperbole? Do you believe that these SS benefits will go bankrupt? Will we lose this money somehow?
What I will tell you is that for current Social Security beneficiaries, people who are going to receive money probably in the next 10 years, I don't think that you should be worried too much. There is concern that possibly in 20 years from now and 10 years from now that Social Security will not be able to pay the full check. I find it highly unlikely that Social Security will actually go bankrupt and that they won't be able to pay the full benefits, because that's going to be bad for Congress, right? Right now, baby boomers are the biggest voting bloc. They will be probably for the next 15 years, right? So as long as they are a very large voting bloc, nobody is going to hurt their Social Security. However, what they will do is they're going to do things that you don't realize affect your benefits, things like this deemed filing rule, right? It didn't affect current beneficiaries, only new beneficiaries. And it's something that nobody understood what they were talking about. Nobody understood how this was going to impact their Social Security benefits, right? Or their future Social Security benefits, so it went under the radar. They're going to do things like that. They're going to do things like tweak the cost of living adjustment so that it doesn't keep pace with inflation, or they're going to tweak how much of your Social Security is taxable. Right now, up to 85% of your Social Security benefits are taxable, but they can easily make that 100%. They can make it more than 100%. They can even make it that you may not realize this, but once you're claiming Social Security benefits, 3% of the taxes you pay actually go back into Social Security. So even though you don't have a line item on your tax return that says you're paying Social Security, you're paying into Social Security, and they may increase that, right? They may change the math of what's included in taxable income for Social Security. So we want to make sure that we're as independent as possible and that we're making the best decisions as possible. So for people who are retiring in the next 10 years, I wouldn't worry about that. That's not my primary concern for them, is that Social Security will not be there. For people my age, for people younger, yes, 100% that's a concern, because the Social Security as it's run right now is not a sustainable program.
We're just about out of time, seconds away. How can we get more information about these SS benefits?
Go to my website, yieldsforyou.com. On there, under resources, I've got a guide called the 5-Minute Social Security Maximization Guide. Go through that, ton of information, ton of links. There's like over 30 links to individual pages on the Social Security Administration website where you can find, if I tell you high level, if you would qualify for something or if you should look more in detail, there's links to it. I have a class on my website. And take me up on the free analysis, right? We'll go through, we'll do this analysis for you, answer any questions you have, and give you the information so you can make the best decisions for yourself and your loved ones.
This is Libel on Fire. I'm Freddie Bell. He's Libel Sternbach. Join us next week as we talk about how to turn your Social Security and retirement accounts into an income stream in retirement. Which accounts should you tap into first, and how to check if your retirement accounts have a ticking time bomb. We'll see you next time.
If you would like to see how the Yields for You team can help you get off the Wall Street roller coaster and save you money on taxes so you can live the life of your dreams, book an appointment online at yieldsforyou.com. That's yieldsforyou.com. Or call 410-914-4894. That's 410-914-4894.
Yields for You is a registered investment advisor in the state of New York and only transacts business in states where the firm is properly registered or is excluded or exempted from registration requirements. Registration as an investment advisor is not an endorsement. Information presented on this program is believed to be factual and up to date, but we do not guarantee its accuracy, and it should not be regarded as a complete analysis of the subjects discussed. Discussion should not be construed as an offer to buy or sell or solicitation of any offer to buy or sell the investments mentioned. Annuity guarantees are subject to the claims paying ability of the issuing insurance company. Content should not be viewed as legal or tax advice. Always consult an attorney or tax professional regarding your specific legal or tax situation.